Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, March 9th, 2022. What I'll do here is a very brief update on the equity markets. Nothing new to report, especially since my last update earlier today, but I do want to show you where we closed the day. So we'll just start out here. I'm going to focus again on QQQ. SPY, will always usually go up, not always, usually go up a little more or less, and no technical changes there. Pretty much the same thing. So here's what we have. In a nutshell, we're still below that key 342.16 after the breakdown a couple weeks ago, several back tests, and you have a downtrend line here. Everything I covered earlier today, so no significant change there. Keeps the market in a precarious technical posture. And the one thing I'm going to say, and I'm going to get down to the 5-minute charts and talk about that, just kind of near-term stuff here in a second, but the one thing that I will continue to point out is that just about every, not all, but I would say the vast majority of key market leading stocks, big names, top components of the S&P 500, the NASDAQ 100, and particularly tech, have positive divergences for the first time in a while. And those are usually, particularly in a bull market, that's when you're looking at usually the next multi-month and even sometimes multi-year rallies when you get these daily divergences. However, in a bear market, they're often, if this is a bear market with more downside to come, again, technically it's already been that in the NASDAQ 100 and many stocks, if you use the traditional 20% definition. But again, I made the case that pretty much it's just par for the course now with the elevated volatility we've had in recent years due to the excessive intervention in the financial markets by the Fed. And so it leads to volatility, bigger moves, bigger swings. The trends are bigger, the bull markets are bigger, the corrections have been bigger, and last couple, even especially the last couple decades, and that's just the new norm. So at some point, and I don't even want to give, if I were to rename or recategorize or define, I should say, what defines constitutes a bull and bear market, I wouldn't even give it a number. Talked about that before, because if I said, okay, well, let's say now 30% or 35 or 40% should constitute a bear market versus the old definition of a 20% drop off the highs, whereas correction instead of being 10, that what I've always said before is it is absolutely 110% specific to a particular security, meaning an individual stock or a sector or an index. Something like natural gas goes up and down. I've seen it go up, well over 10% in a single day, many times, or down that much or more, quite a bit more. And just the swing trends that we trade here on the site, been doing this for years, are usually 15, 20, 30%, quick 40% sometimes pops, rips and dips over just a couple weeks. So each individual sector, some are more volatile than others and move a lot faster than others. So I'm just going to leave it at that. All right, now what I wanted to show you here is that again, and I've been talking about it, we had them here at this point, and we still have pretty solid or strong positive divergence on, again, not just QQQ, not just SPY, but you go down the line and just about everything here. Apple had a divergent low recently right there. You can see lower low in prices, higher lows in the indicators. Down the line, all of them. Look at Microsoft. Now, so what I'm showing you, just some of the things that I don't like, because I sit here every day after day and tell you, I'll reiterate if I'm still, what I'm expecting, whether I'm bullish or bearish on something. And you take Microsoft for example, and what today, one day doesn't make a trend, but I did see some things like Microsoft, for example, recover a key level right there. 283.10 was very important support. It was the bottom of this well-defined trading range. We popped to the upside, set up a new trading range there, then dropped back down, and then went back into that old trading range, or a little box, had a stick stave there. We looked like we were going to break down Again, I commented on that a couple weeks ago, and that was when the invasion started, when Russia invaded Ukraine, and the markets were plunged, set to go down. And like I said, I suspect there was strong government intervention, popped it up, and that's fine, no problem. We're still keeping the downtrend intact. And we ran right back into those 200-day moving averages. But what I wanted to say is, so you closed the day, even though we were down early in the morning, we closed the day well back above that level. Just like there too, little candlestick drop down below, and it closed back above. So now, where am I going with this? Well, yesterday we were clearly below there, but look, by reversing, it's causing the PPO to start to turn back up more back above that level. So I'll continue. These are developments. One stock, one index, one sector doesn't make the entire market, but more and more of these, if you have false breakdowns, they're called bear traps, and it's just something to monitor going forward. It's not at this point in time anything that's going to change my position. I told you I have my concerns yesterday about the rally, and there may be some more upside, and there's still maybe more upside tomorrow and the next day. Maybe, maybe not. I'm going to show you some levels in the 5-minute chart again, but these are things I'll watch. And the more stocks that I see, holding, this one held. A lot of these either made double bottom, tested their other recent lows successfully, and did so with a bullish, aka positive or bullish divergence. And actually, the divergence, technically, that line should be like this right here. That's your divergence line, not how I had it extended there, because this was a higher low. You never made a lower low. You had equal lows against higher lows right there at that point, and that's Alphabet. And now, see, Alphabet hasn't recovered. Here's a big level to me. Yeah, it got traded through a few times. We had one breakdown, got back above, but this was a very well-defined, almost year-long, multi-month sideways trading range, and had a little brief breakdown there, went back in. Once you re-entered the range, as you often do, you went to the top of the range again, got checked once more, broke down. This time around, we back tested along with the 200-day moving averages, which are right above. This blue line is the 200 simple, and this red line right here is the exponential. So you have a confluence of major resistance now. Support once broken becomes resistance, and so it's around this area. So these are the things I'll watch, and if one by one these names again move up, it means that positive divergence is confirmed. It's starting to play out, and it could play out for more. Again, something I'll monitor, and you can do the same. You can go through all your charts, and you see Amazon. Here's another example. Amazon right here. Very big. The box. I know there's a lot of lines in this. Here, let me do this for you. I'll turn all these lines off and show you what I had. The key levels. I had a box right here. Let me use my box tool. This was a still not a box tool. I'm going to get it here. Here we go. Okay. There was a well over a year-long trading range with 2 failed breakout attempts to break out the new highs and above the trading range, both smack down. Trade a lot of times you'll trade around the midpoint of the range. It'll act as support and resistance. So once it broke the midpoint, went down again, a whipsaw. It's been a whippy market. Bulls have had whipsaws, bears have had whipsaws, but right now we're below it. And so all you can do is take the most recent buy or sell signal, and that's still intact. Now, where I'm going, this is another one I'll watch. I'll put the box back there. So we watch this level right here, the bottom of the range, and if we get another recovery, and then you look at things such as trend lines, moving averages, Fibonacci resistance levels, and more check marks you get for the bulls say, hey, this divergence or these divergences could play out for much more, or like many bear markets early on in there, you get these. That's common. That's just how the charts work, and you start to form set up divergences, and they don't play out, or they play out for a relatively small bounce, but you keep the downtrend intact. So those are the things I'm watching, and strip everything else away, or just look at what I'm highlighting here. There's your downtrend line, there's your divergence line. Divergence can continue too. You can build divergence. Remember, it took a long time to build these divergent highs here, and then they finally played out, and the bigger they are, usually the bigger the drop. But you could go up like this and continue to make higher highs in the indicators down here, the RSI and the PPO, and Amazon could do something like this and then break out of a bullish falling wedge. Or this whole thing could fall apart. It looks like eye candy for bulls, and I'll watch it. If I see a lot of this, certainly at some point sooner than later be covering shorts and may even layer into longs for quick trades or longer term trades. All right, so that's kind of big picture stuff, and I can go down the line again over and over and over in NVIDIA, and these are the things that for not literally, but I would say keep me up at night. Again, I use the rule sell down to the point at which you can sleep at night, so I'm only speaking figuratively. But these are the things that would foil or could foil, my next downside targets being hit on the indexes. And there's NVIDIA big support. That's why I have the line yellow. That's 209. Remember, semis are one of the short trade ideas we have. We have a nice, clean, well-defined downtrend line, big support. And this is a fight between bulls and bears, a fight for the, to the death, really. Because if we break this level and cannot, it is uber bearish. If you have a beautiful, and that's what this is. I hate to say it, it's a beautiful textbook, bullish pattern, bullish falling wedge pattern. 1, 2, 3, 4. Well, in the day before, multiple successful tests of that 209-ish support right there. And so again, things I'm watching. Moving averages are just above, and a solid break above this, and especially other semiconductors breaking out and other tech stocks. That's going to be bullish. So this is where you need to learn to pivot and flip. We're not there yet. We start getting up there. I think just looking at these if they are wedges, they would most likely take a little more time to develop. In other words, run up, hit that trend line. And that trend line's probably on most of these will coincide with, we're going to step it back down to QQQ now. There's the downtrend line on the daily, and I also gave you one on the 60-minute chart recently we've been highlighting. And so that's it. So we'll see what happens there. Now let's talk what happened today. So if you look at yesterday's video, I'm going to pause this and pull that up. And this is just a screenshot here. Pause is a little blurry because I paused it. But this is a screenshot on yesterday's mid-session technical analysis video. And you can see it about just past the 19-minute mark. I started covering QQQ. And for that, I gave you guys very short-term levels, resistance levels to watch that were likely to come into play. That one I was highlighting was at 335.06. And it had this reaction here, a couple reactions there, reactions here that I highlighted. 335.06. So let's see what happened today. We did have more upside in the markets, and look at where we closed. You can't make this stuff up. 335.08. So 2 pennies on a 335 point security. That won't even give you a fraction of a decimal. It'll give you like one of those negative whatever funky returns on a calculator if you try to put it in percentage terms, because it's a mere fraction of a basis point. A basis point's 1/10 of or 1/100th of a percent. Anywho, that's look. Does that mean we stopped there for good? No, but it means it did stop there today. We briefly at the last few minutes tried to take it out and then failed and closed right on that resistance level. So if you think that was mere coincidence, let's check this out. I put up this after that video yesterday. I put these up today. You know me, and I like my fibs, and I always say this, it never, ever, ever fails to amaze me when I always put my price levels first, then I like to add my fibs. And so this fib right here, again, we're just on a 5-minute chart. Remember, short-term stuff here, right? 5-minute time frame says it right here as well. So that fib measures from that high right there. I need to move it up with just a hair. Hopefully you can make it out in the video. So I'm capturing this most recent, that's the most significant recent reaction high. We were in an uptrend up to that point, pivoted, went down, and then you measure this fib line goes down all the way to this recent low right here. That's right here. And you can't even see the fib line because it is perfect. It's right there. It's the 50% Fibonacci retracement. So again, use fibs and price levels in conjunction with each other, and you'll be amazed. Oh, and okay, so maybe that's interesting, maybe not. Again, I didn't have these fibs up yesterday. I didn't even try. Look where that first level I gave you was at 330.86. That's the 38.2. And the ones I like to focus on, I always talk about this, the typical range for if it's this, big if this is only a counter trend bounce with more downside to come in the markets, which I'm still viewing it as at this point in time, though I always say those counter trend bounces typically will fall anywhere in this range from the 38.2% fib to the 61 0.8% Fibonacci retracement. And again, you cannot make this up. These are the levels I gave you yesterday. Fibs had nothing to do with the time. Their price resistance 339.05, or call it 339, and that is right there, slightest hair above that 61.8 fib. So okay, so these are the levels, and they did produce reactions. We had a reaction on the initial tag. We traded on it for over an hour or so, maybe even a couple hours throughout. Actually, that was a good part of the day. Tried to gain it and then closed right on it. So effectively, again, a rally into, and it just stopped at cold today, roughly at that 335 plus 50% fib. If we go up tomorrow, no guarantees, but we'll most likely have a reaction. And I define a reaction as to one of two things or a combination thereof. I define it as when you're going up into a resistance level reaction, is either a reversal and a pullback, or a consolidation, or it can be a combination of both. And likewise, when you're going down, if you have support, then that's a reaction. You hit the support, and you either bounce and reverse, or you consolidate on it and then either continue or move up. All right, well, same levels as yesterday, so nothing new to update. We just hit that. Like I said, we're coming off of some divergent low. This is, again, 5-minute charts, a good vehicle for active traders. And the takeaway is, just wanted to say, because a 3.55% gain, sure, looks impressive. If you were not hedged up on any of your short positions today, assuming you were short, you felt that pain, no doubt. I also made some comments on the homepage today. I'll get to those in a second. About not only hedging but also rotating, how tech has been beat down. And when I just talked about a lot of leading stocks and sectors have divergence, most of that's in tech. So I'm going to talk on that in just a second here. But you have the levels, same levels as yesterday. Okay, and from time to time, I like to, when I get caught up on the comments on the site questions, I'll loop back to those and share, because unless you're coming in the site regularly checking, then you're going to miss some things. Becky asked Nat Gas, talk Nat Gas to me, and I said, sure, glad you brought it up. You know me, if you traded or followed the site for a while, when I'm on natural gas, I'm on it, trading it in, out, long, short, constant updates, and then just step away. It's one of my favorite trading vehicles. I made comment recently that with everything going on, I've stepped back and it's more of hit and run mode, and I'm not crazy about those things such as oil, gas, wheat, things that are most directly impacted by what's going on with Russia and Ukraine. Too news driven, too volatile. However, natural gas, and keep in mind, by the way, we don't, natural gas, the way it's transported, you have LNG, liquid natural gas, and we do export some of that over to Europe, but most of the natural gas runs through pipelines. So we're not, Europe's going to get almost all its natural gas from Russia and elsewhere, and so this is our domestic natural gas, nat gas futures. They're not as impacted as crude oil is, and so anyway, you can check this chart out. Becky brought it up. Here's my 60-minute chart. You got a nice uptrend line right here. We got a pretty decent support level. See these reaction lows? It's a support zone. I have a lot of reactions on that level of gap there, and so that's it. I just said, look, we're coming up. We had, natural gas trades so well to the technicals. Divergent low right here on the PPO, rally. Divergent high, correction. Divergent low, rally. And of course, there's trend line breaks and other things you look at. Divergent high recently, we're coming down. And that buy zone's about 440.05 to 320, 329, and the uptrend line should come in, depending on how we get there. So anyways, that's a buy zone. I think Becky said she's starting to scale into it. And sure, you can do that. And targets, I'll just have to look at. Nothing jumps out as a target right away. Just, you can buy it there, set a stop, and let it run. Probably continue this uptrend. And of course, yeah, again, set a stop, because if it breaks that line, it's probably going a lot lower. And the one thing lacking, you don't have any divergence at this point in time, nor do you have to have it. So it's I'm not crazy hot about it, but just wanted to share that one. Okay, another one I wanted to share with you guys. You would have received the email as a subscriber when a post is made. Unless you've unsubscribed, you should get an email. And that I made a typo in the one that went out of XLK. All these X's are, the spider ETFs, sector ETFs. So I'm into correct ticker, and Mike here said, "Do you mean to get short on XLK?" And I said, "Well, no, really. I was, as the chart and in the notes in the on that post said it was XLF I was talking about, but it brings a good point." And so here's my reply to that. XLK, which is the tech sector, has been my primary short really since the Nasdaq top last year. I think it was November, right? Milked it all the way down and covered at some of the key points, reversed, and it's been great. So the Nasdaq fell just over 20%. The Nasdaq 100, I've even done considerably better than that, and posted a lot of those reversals and trading up since then. Kind of micromanage the swing trade down as an active trader, and even if you just swung short it down, so far you're still very profitable. But what I went on to say is, so effectively, the Nasdaq 100 futures are pretty much tech, and you can do this yourself. Overlay a chart of QQQ with XLK, and they will virtually mirror each other. And it's simple. The tech sector is by far, it makes up over 50%, over half. That is an extremely unbalanced index. And again, it's good because that's what I want to trade at times. If I see the tech sector looking like it's going to correct, then I'm going to use the Nasdaq 100 and not the S&P 500. But with that being said, the Nasdaq 100 has already fallen about twice the S&P 500. Remember, we hit bear market territory the other day in the Nasdaq 100 at over 20%, and only correction territory in the S&P 500. I think is down 12% off the highs or something. And so the other day I gave you guys a trade idea on the mid caps. They haven't really come down nearly as hard yet. And so what I'm doing is starting to instead of being overweighted the Nasdaq 100, which is, it's starting to shift into other things, and also, and that's not including talking about the hedging I did, yesterday. But anyway, so other sectors, like I said, the mid cap and the financials. So as they're likely to start to play catch up with the tech sector, so it's sector rotation is what they call it. In other words, the tech sector's gotten beat up. Bargain hunters, they can't help, even if the tech, I believe it's going a lot lower, don't get me wrong, but again, it's that Pavlovian conditioning. We're still in really a mega bull market that started all the way back in the Nasdaq in November 2008. The rest of the indexes bottomed in March of 09, and everything since then, in my book, has just been a correction. So it is hard not to be instilled in that mindset to buy the dips, and so you're going to see some rallies. You're going to see the bargain hunters come in and start buying Google and Facebook and Microsoft. So my point is, yeah, you might want to start looking at other things that have more meat on the bone, and that way, even if I'm completely wrong on there being, my next downside targets being hit on the indexes, well, I'm going to be less wrong by going with things that haven't fallen as much, because if this market's going back to new highs and beyond, you're probably going to get more bang for your buck now in the beaten down tech stocks than you are in financials. So anywho, that's, it's not a complete pivot, it's just a shift that way. What else? Yeah, that's about it on that one. And let me see if there was anything else I wanted to cover. No, I know what I wanted to cover with you guys. I want to loop back to a couple months ago, right around the time the market was starting to top, and that certainly didn't help these things, but quite a few of them played out. I highlighted the educational and training services sector, and there's many stocks in there, and I gave you about the top 20 or so that were my favorite. Those only I went through all of them, and those are the ones that stood out. And some popped, and they popped pretty big. COE, there was bullish falling wedge and went up and hit the second target, almost a perfect tag of that second target, reversed, came back down. Here's what I'm doing is an update on these, because for a while there the market was under pressure, so especially crap stocks like these. You can reference my old videos and comments. I understand the awful fundamental position a lot, especially the Chinese ones are with the regulatory changes that China made. That's what knocked the snot of them back here. But again, the charts were constructive. So I just wanted to update this sector because it is something And again, they what's good about them is they usually fly under the radar and aren't, because they're not indexed in the S&P 500 and Nasdaq 100. So there are times where the market can be correcting, and these things can do the complete opposite, go the other way. So that was a 150% rally from the breakout of the wedge. And then look what happened. I have not touched these lines. I had a support level here, resistance, I should say, after the wedge at 102 was support back there, and boom, we pulled back to it and it held. So this is so far a breakout, hit of my first target, followed by the typical reaction. We didn't get a reaction off T1, you don't always, but we did off T2 for sure. And look, and it fell back to what I had at the time, the lowest resistance level before the wedge broke out, support, and it's moving up. And today it hit T1, which is still resistance. Even though we didn't have a much of a reaction initially through it, we did on the way back down. Actually, we did. We parked there. That's a reaction. You hit it that day and stopped. That's certainly a reaction. The next day you gapped above it. Then you came back after hitting T2 perfectly. You came back and made a perfect back test of T1 once, twice. And then finally, when that level broke, then you go down to the next support. This is technical analysis. So all I'm getting at, these charts are playing out really nice. And so now the way it works, we hit a 160 again, another reaction there. And if we pop it, we're probably going to go back to 223 T2. But look, we already hit it once. The way these work is I typically expect a reaction on the initial tag of each of my targets. After that, it's fair game. And quite often you may have a second reaction, you may never get through it, but if you pop it, you're probably going to 365, and the odds are higher now because it's already been hit once and checked and had the pullback that we can just pop right on through there. So I just thrown it out here where we're closed 149, and if T3 is hit, that's going to be another 150% from where we closed today. So I'm just going to rifle through the rest of them, and then I'm going to do a few other updates. These are all the ones, again, covered. They were mostly towards the end of last year, maybe earlier this year. But this one's coming off, starting to move, took volume today, and that's why I'm updating these now, because I keep an eye on these things even if I don't update them every day. That's how this site works. What I'm sharing with you is a tiny fraction of what I look at every day. I don't want to, as it is, I talk long enough, these videos go long enough, and people say, well, can you cover this every day, this every day, this every day as well? No. The videos, it just, number one, the videos or the time that I have in the day is just not enough to put that many charts out and cover them all. And it also dilutes my analysis. So what I try to do is highlight to you what stands out the best at the time, what is either currently actionable, meaning a buy or a sell at the moment, or about to be, or something to watch. And anywho, that we're seeing, saw some nice volume today, and again, it's not just random volume. Yeah, these stocks are left to death, were priced for death, and they maybe go to zero. Again, watch the old videos. I did all the disclaimers. Uber high risk. Stay away if it's not your cup of tea. But bottom line, aggressive trades have an above average risk and return. Meaning if I'm right and these play out, this one from where it is today, could probably add a little minor downtrend line in there somewhere like that. But if it hits at this point in time, your first target or next resistance, first stop, is at 318. It's a downtrend line, and that's 33% above where we are today. And I told you before, if you want to take something like this, I call it Vegas money, the kind of money I'd put in my pocket if I was going to Vegas. I'm not a big gambler. This is my form of gambling, if you want to call it that. But if I were to, you put them what you're willing to lose, and that's it. You don't put this isn't your core holdings. Even if you're an aggressive trader, this is, you keep these position sizes small. Why? Because if you're right, you're going to make, couple 100% or more on these, and so you don't have to put that much money in them to make a fair amount of profit in dollar terms. I don't think about everything. At the end of the day, I don't care if I take a 30% loss on a trade. If I was targeting 150% gain, what I care about is a dollar amount that I make or lose. All right, so a trade that I might be looking at 150% profit and willing to take a 30% stop loss because of the volatility of that trade, I take down small enough position size that if I lose 30% on that, I'm not going to lose any more in dollar terms than I'd lose on something like Apple or the Nasdaq 100 or whatever, that I might have an 8% stop loss because I took a higher position. So there it is. I'm going to rifle through these now. Enough on that. I just have to get those disclaimers out there. It's not a disclaimer. I'm just telling you what I see. I'm not telling you what to buy or sell. You decide that. But it's important that you realize the risk when you take these kind of stocks, that you could wake up tomorrow and they could have a bankruptcy filing on, and then the stock is way down. This one looks just, again, it's the same thing I was covering before. They look ready to pop. They're basing. This is a basing pattern here. That is strong positive divergence. Yes, fundamentals are crap in these, but that doesn't matter. Especially in stock, like in the long run it does, but maybe not. Maybe the fundamentals are going to change. And China does something. Again, they're not all Chinese companies, by the way. A lot of them were, but boy, that's a big level right there. We tried to pop it a couple times, about 31.20, give or take. It's not a hard line, but you can see this, just that basing pattern right there, and the positive divergence, and then the downtrend line that comes into play. And so if it pops, you're going to see this thing in probably a day or two run from about 31 all the way to 39, 35. That's about 27%. And then there's a massive gap. This gap's probably only going to be filled if China reverses or does something that undoes the the regulatory changes they did back then. But even just to come in, test and backfill, or test the bottom of that gap, you're talking about 25%. All right, HLG, very thinly traded, like a lot of these, but this one's taken out that bottom there, that pacing pattern. So technically, you could buy it here with a stop somewhat under that 1338 support. Targets are still 1762, and then the downtrend line. And again, if these things really rock, it may go all the way up there to about 29.92. But just to run to the downtrend line would still be about a 55% return. ZVO. Again, these are potentially explosive chart patterns. That's the only reason I'm looping back to them again. Primary downtrend line, secondary downtrend line, which is well defined, tight. Pop that one, you probably hit here. Maybe get a reaction, maybe not. 168, 210, which is probably all for now. If get it, maybe take profits there, or at least trail stops up. Max target would be $3. AMBO. Not one of my favorites, but there's, same thing, divergences building, trend lines. But TAL, nice downtrend line there, recently broke out, but ran into big resistance, 379. But look at this, got smacked down off resistance, no problemo. This is a breakout and a back test so far. And now, again, the reason I'm highlighting these, starting to move up. It must be trading in after hours. It just said 17, just about 15%. And that's it. So you can buy it here because we back test and we're starting to move up. But what I would do is layer in if it is your thing, and then wait and take add a second lot. Additional. Don't take a full position. You could do whatever you want. Full position with a tighter stop. But I like a partial position, then add if it pops 380. First target 570, really a target zone 577 to about 656, and then again the monster gap overhead if somehow those gaps are filled. And I can see the potential in the chart. Certainly see the potential there. It'll be a 622% rally from where we closed. STG downtrend line needs to pop that. If it pops a trend line, then it's probably going to run up, and then it needs to pop 680, and if it can pop that, it can run. GOTU. Big divergence, building. Here was our downtrend line. Again, I haven't modified these charts since I last updated them. And all we did is we build the divergence has gotten even larger than it was back there. And again, starting to move up. This could just be short cover in a one-day rally, but if you want to see volume coming into these, and the volume was good today too, by the way, guys. So these are the little things that fly under the radar, and I like to get in these early. And if the momentum traders start to pick up on them too, they pile in, and then you can get a nice run. So let's just say right now, again, easy if you're just wondering, okay, Randy, you're listing different targets. What do I do? What do I take? I'd be holding out for about that 331 level right there. Sell a little shy of it. It's the actual resistance, and that's about 125% run if you get it. There's first. I'm going to add one more level because this is, since there gets some support back there, and then a couple reactions. That's resistance. You can use any or all of those as targets. LAIX, that one I laid out, but it already popped up big on some type of news or something, maybe a buyout or whatever. And so, if you were in it, suggested, told you what I do back then as a shotgun approach, where you just sprinkle little bits in all the different names, because you never know which ones are going to pop and when they're going to pop. And that was 1,000% return on that gap up. COE, I think I already covered. China Online, I think I did. Yeah, I should have started with that. Yeah, I sure did. And again, I think I gave you till the final target. I told you 151, 150% or so. REDU, it's another one. Broke out of that trend line there. Big divergent low. And we already had a breakout back there. I started highlighting back here. And then I got on them again back here after some of these popped initially. And from where it broke out, here's one you can see it broke out, and then it had some price resistance right around here. And when it finally cleared that, so from the breakout point in the back test, so let me just go from where it finally popped above that minor resistance there, just to give you an idea what these things can do. And that was in a day and a half, 150%. And then it took out this trend line here. It was a big green candle, broke out of there, and it ran up so far about 100% almost. And it's got this little bull flag action going there. There's a bull flag starting to break out. If you zoom in real tight, you can see it's kind of struggling right here. So if this thing can pop up here on volume, that flag's probably going to play out and take us up to my 187 to 219 target right there. There's a gap for you. And that would be, even if it hits that low end, my minimum target, 123%. AFYA, same thing. The divergence last time I covered it, I guess, was there. And the only thing that's changed, it's getting bigger, starting to move up again. Seeing these things take a little volume today. It may just be that people think it's safe to get back in the market, so they're buying up junk. But again, the charts are constructive. I wouldn't, I could go through today's top gainers and go over, sit here and talk for probably 3 hours on stocks that had big moves, but they're random to me. These aren't random because these are constructive chart patterns, and a lot of them have recently broken out. There's a impulsive move up, took out my trend line, back tested it while it's flagging. So if it can run up here, the magic number, let me do this. Let me set an alert right there about that 6076 resistance, because that should take us out of the flag, and it's also price resistance. So pop, we get that. Flag would measure for kicks and giggles. Let me take the measured target here, which is the highest point up to where the flag started, add it to the bottom of the flag, and that's going to take us in here. So now I'm going to take that flag measurement, I'm going to add that as another potential target, only because I see some resistance and support there. I think it's a technical level. That's 73.73. If you took it here at the bottom of the flag, just speculative trade, that's 30% if hit. But I think it can work its way up there to that 79.33 level if these guys get going, that is. RYB, a great a great example. Yeah, an educational example, an education stock. That's why I stumbled on that, of how you can get smoked in these things, especially if you don't use stops. So here's one that looked good, divergent low. I would have pointed out before. It's on my list. Broke out, looked like it was going, and it was going. Came in, but the backtest failed. And then it broke out again, and maybe you were in it, but then. So, that drop right there, something happened. Now it took it under $1 share. It was a 50% drop. So you have to know each and every one of these that I just covered has the potential to drop that much or more in very short order. AACG, 223, that'd be a 74% run. Max target 346, 170%. ZME, that one was also highlighted back here when I started covering them, and it popped. And this is a case, back at the time I said take that shotgun approach. The breakout occurred on a big gap up. There must have been some news. It was a 600% rally in a single day, and then boom, they faded it all after that. EDU still diverging, trying to break out. A couple failed attempts so far. Nothing that really looked like a convincing breakout. Just little limps through and around the trend line. So if it can pop at 177, 254, and that would be 254 would be about almost a double on the stock, almost 100% return. FHS broke out, but the breakout looked like it failed today. So unless it can recover soon, and then it needs to pop 213. I have two more and then we're done. PRDO popped up here, hit my 1251 target, put in a divergent high, pulled back, and the divergence is still in place now. Yeah, still in place. Here we go. And then last one is YQ, last but not least. This one has broken out recently, had a nice clean downtrend line, big positive divergence there. Broke out and back tested textbook TA, and it started to move up since they back. And I have not touched this line. This line's not been modified. And look at that. There was your breakout candle. The back test was perfect on the 24th, right to that line. I think you can see that little skinny tail or wick on that candle, and once it kissed the back test, it started moving up. From there, it's moved up. I can't grab it exactly because I can do it this way and turn that off and tell you exactly how much it's moved up since the back test. 63%. So you don't have to bat 1,000 on these things. You just collectively, if the group, and it's starting to take, and again, there's volume today, guys. That's why I'm highlighting these. It's up almost 20% today on pretty good volume. In the last few days, the volume's been increasing. So that's it. And the other ones, I gave you a couple other junk stocks recently in the last couple weeks. SONN, that breakout failed. No reason to be in it now. Breakout didn't really follow through that day, and the next day was down. I think I already updated and told you that one. And then what was the other one? I got an alert today on JT, price alert. Just cracking. It's not my favorite, but and the breakout wasn't solid, but you have some key moving average of 200 days above there. Keep an eye on it. It was on volume, so if it can follow through, this one could run. I would say it will run up to yeah, let's say about 230. I think could easily run up to about 240. Again, not one of my favorites. Just want to let you know I had a price floor on it. It could go. You never know which ones are going to go. So if you're, what I call a gunslinger trader, you like these aggressive trades, that's it. The other one I got yesterday, price alert on, was KXIN Auto Holdings. I think that's a Chinese company, I believe. And divergent low, breakout right there. Big green impulsive candle came in and back tested yesterday. Oh yeah, so my alert would have been the day before yesterday. And my minimum target's 129, not yet hit. And then I need to add one more level right here. Yes, definitely. It's 168. That would be at this point in time my max target. Nice reaction low there, couple reactions there, and then we tested it back from below. So all in all, if it's hit, and you know what, you might want to wait for this one. See this level right here, these recent highs around there, that's what's capped it. So if it can pop that, it's probably going to run. That'd be about 124. And if it can pop 124 to run up to 168, that's going to be about a 35% gain. So therefore, you could allow yourself, let's say, a 10 to 12% stop loss on that one. But also understand the risk. You're trading a stock that was recently just a penny stock below $1 a share, and this thing, you could wake up to this thing being down to 30 cents or so on a darn bankruptcy filing or delisting or something else. So all these trades I just covered for the in the back part of this video are all very aggressive trades. But again, it's risk and return go hand in hand. I'll risk, if you don't put too much money in it, if it gaps down 50% and you made sure you were allotted for that in your position size, then it's not going to kill you. But if you take a big position, put in, a third of your portfolio or any decent fraction, especially in any one of these, that's why I take that shotgun approach. You get zero commissions now at a lot of brokers, or dirt cheap commission if you are paying any commission at all, and it makes it cost effective to take a little shotgun approach to these guys. Or, as I said before, pass if it's not your cup of tea. All right, we're going to end it here. Only a long video because I went through all these trade ideas for you, but hopefully we'll see what the markets do. I'll be curious to see how the markets follow through tomorrow, especially running into those resistance and fib levels today. But again, as I told you in the video before, still quite a bit of upside before anything significantly changes. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great night.